What if the next big financial disaster isn't buried in some offshore crypto exchange like FTX, but sitting right in front of us? On the NASDAQ, led by a billionaire, worshipped by crypto believers, praised as a visionary.
So prolific, influential.
If I had to pick one mentor of the modern era, it would be Satoshi.
But what if what he's doing is not genius? What if it's something else entirely?
MicroStrategy's entire business model is a ticking time bomb.
This is the question that nobody wants to ask, and that's what this story is about. It's not some sort of theory, it's not a takedown mission, it's a fully documented look at one of the boldest, and in my opinion, the boldest financial experiment unfolding in real time. It might be the smartest Bitcoin strategy that anybody has ever created.
In time, we're going to have countries coming, working to outdo each other.
Or it could become the next FTX.
Craig called him the biggest loser in history.
It's up for you to decide, and it starts with one man. His name is Michael Saylor.
Michael Saylor is a freaking genius.
It can convert us from owing 40 trillion to owning 40 trillion of net assets. So
Back in 2000, he was a rising tech mogul. He took his company MicroStrategy public during the dot-com bubble. On paper, he was worth more than $7 billion. Then his crash came. The SEC accused him of inflating his own revenues. The stock tanked 99%. In literally just days, Saylor had lost over $6 billion. This was one of the biggest implosions of the entire dot-com era. Today, his company, though better known for crypto now than software, holds more than 500,000 Bitcoin. That's over 1% of all Bitcoin that'll ever exist. At today's prices, it's worth more than $50 billion. To put that into perspective, MicroStrategy and Michael Saylor hold more Bitcoin than any government on earth. That's more Bitcoin than the United States. That's more Bitcoin than China, more than Germany, more than any sovereign nation. That's not speculation, it's public and verified information. And the company's total market cap right now is over $100 billion, which means investors are valuing it at least 2 times of what Bitcoin is actually worth. Now, why is this? Well, it's because this isn't a software company anymore. Literally not at all. It's not a Bitcoin trust either. It's something entirely new. Saylor has built a financial engine. He raises capital by selling stock or issuing debt, using that capital to buy more Bitcoin. Bitcoin goes up, his stock goes up. When the stock goes up, he raises more money. And at this point in time, the whole cycle repeats again and again and again. It's a self-reinforcing loop built to turn fiat into Bitcoin and momentum into more market cap. But like any other system powered by belief, it only works as long as the belief holds. And if Bitcoin drops or just stops rising, the machine begins to shake and falter. And when confidence breaks, everything can unwind. We've seen what happens when belief disappears. It happened with FTX. It also happened with Enron. It happened with the South Sea bubble. This documentary won't tell you what's going to happen, but it'll show you exactly how it could happen, because this company, this enterprise, this model might be the future of all of Bitcoin and corporate finance. It really could be. Or it might be the start of the next financial meltdown. This is the story of MicroStrategy, or as we now call it, strategy. And it starts right now. Before it became a Bitcoin juggernaut, MicroStrategy was something else entirely. It started as a business software company founded back in 1989 by Michael Saylor. Back then, it had nothing to do with crypto. It was a traditional enterprise business. It was a data firm selling analytical tools to large corporations. And for a while, it worked. It made money, and it was a good business. In 1998, Saylor took his company public. The timing was absolutely perfect. This was the peak of the dot-com boom. MicroStrategy's stock absolutely exploded, and Saylor, on paper, became one of the richest men in America. He was worth over $7 billion. Then it all collapsed. In March of 2000, the SEC accused MicroStrategy of misstating revenue. The stock plunged almost 62% in just a single day, and by the end of that crash, Saylor had lost over $3 billion in personal net worth, almost overnight. Some reports estimate the loss being as high as $6 billion, but most credible sources put it just above $3 billion. Either way, it was one of the single largest days of losing wealth, personal wealth, in American history. Most CEOs would have walked away, but Michael Saylor didn't. He stayed. He kept the company alive, quietly, patiently, for literally the next 2 decades. And for this time, MicroStrategy operated as a niche enterprise software firm, profitable but slow growing. It was largely ignored by Wall Street, but then in 2020, something changed. The pandemic hit.
Some of the most common symptoms include pain.
Hospitals in states across the country are reaching capacity.
Overall, children are far less likely to become infected, but Fauci told the senators that there are troubling signs with children.
19 people have died in California.
The FDA approved a second pill for treating it.
This crisis is spiraling out of control.
We know the numbers are going to go up.
The Federal Reserve dropped rates to zero.
Today, the FOMC kept interest rates near zero.
Trillions of dollars were printed, and in Saylor's view, the value of the dollar started to erode.
You can't trust the banks.
So he had to make a move. He took $250 million of his own company's cash and he bought Bitcoin. No other public company had done anything like it. It was extremely bold. Some said insane.
Michael Saylor's statements become crazier by the day.
But Saylor believed it was one of the most rational moves in an irrational economy, and that it was just the beginning. Over the next 4 years, MicroStrategy transformed completely. By April of 2025, the company held over 538,200 Bitcoin. That's more than 1% of all of the Bitcoin that will ever exist, worth over $50 billion at the time of this recording. More than BlackRock, more than Fidelity, more than any government in the world, including the United States and China. With each new Bitcoin purchase, the company's stock has continued to rise. It's become clear that MicroStrategy wasn't just a software company anymore. It wasn't behaving like a hedge fund. It wasn't structured like some sort of ETF, and it wasn't regulated like a trust. This was something else entirely. This is a new kind of financial engine designed to raise money, buy Bitcoin, drive its own stock price higher, then raise more money again. It was a loop, a feedback loop, one that only worked as long as the belief held strong. This wasn't just a bet on Bitcoin's long-term value. This was something far more aggressive. And in the next chapter, we'll break down exactly how this works, because once you understand the structure and the pressure points that keep it alive, you'll realize something. This isn't just a crypto strategy, it's literally a system. And systems like this don't break slowly. They break all at once. In the early days, this was just another tech company. MicroStrategy was founded in 1989. It sold that enterprise software, analytical tools, business intelligence platforms. It was never anything flashy, nothing revolutionary, but over the years, it just kind of survived. It lasted through the dot-com crash, the financial crisis, and the rise of big tech. And while it never reached the sort of heights of an Amazon or a Google or an Apple, it stayed profitable. It stayed alive, which is more than most businesses. And then came 2020. That's when Michael Saylor made the decision to change everything. He took $250 million from the company's balance sheet and he bought Bitcoin. Not a little, a lot. And once that door opened, it's never closed again. And today, the company holds 538,200 Bitcoin, worth over $50 billion. That's as of late April 2025. But the story doesn't stop at the balance sheet, because in February of 2025, the company did something symbolic. It changed its name. No longer MicroStrategy, now just Strategy. According to their press release, the new name reflects the company's core identity, a Bitcoin treasury company. Not a software firm, not an enterprise platform, just Strategy. They launched a new logo, a bold orange stylized bee, a new color scheme, a new brand, and really a message to the world to prove that this isn't a pivot, it's a rebirth. Michael Saylor said it best. Strategy is one of the most powerful and positive words in the human language. It represents a simplification of our company name to its most important strategic core. And their CEO, Phong Le, said, strategy is innovating in the two most transformative technologies of the 21st century, Bitcoin and artificial intelligence. You see, it's more than a rebrand. It's literally a signal. Strategy isn't just buying Bitcoin, it's building an entirely new kind of corporate structure around it. And the world has taken notice. Wall Street, retail investors, sovereign funds, everybody right now is watching, because this isn't just like a company holding Bitcoin on its balance sheet. It's a brand new way of doing things. It's a machine, one that uses equity, debt, and market momentum to accumulate more and more Bitcoin at scale. And as we'll see next, the system they've built isn't just aggressive in nature, it might be one of the most reflexive financial models we've ever seen. So the question really is, can it keep working, or is it just one bad month or year away from unraveling?
Is there a price at which you would consider selling some of the Bitcoin, pulling out?
So now that strategy has a new identity, it's time to take a look at how this machine actually works, because what they've built isn't a Bitcoin ETF, and it's certainly not a software company that happens to hold cryptocurrency. It's a financial engine, and that engine runs on something called reflexivity. Now, let me break this down to you in each step so you really understand. First, strategy issues debt or sells new shares of stock to raise cash. Second, they use that cash to buy more Bitcoin. As Bitcoin goes up, the value of their holdings goes up. And because the company holds so much Bitcoin, their stock price now goes up with all of this. The higher their stock price climbs, the easier it becomes to issue more shares or get new debt at better terms. So at this point, they do it again. They raise more money, they buy more Bitcoin, the price of Bitcoin goes up, the stock goes up, confidence grows, and then they get more money, and the cycle repeats. See, it's just one big loop, a self-reinforcing system. And it really works beautifully until it doesn't, because reflexivity cuts both ways. If Bitcoin ever falls, or even worse maybe, just stalls, this loop can reverse. Instead of rising confidence, you get rising fear. Instead of getting these stock gains, you get sell-offs. Instead of cheap debt that anybody wants to give you, you get expensive debt, or maybe even worse, no access at all. And the entire machine slows down, or worse yet, breaks. This isn't some sort of theory of mine. We've already seen a glimpse of this in the past. You see, back in 2022 and 2023, strategy traded at a discount to the Bitcoin it held. Not a premium, a discount. Investors weren't sure if the strategy would hold. Momentum completely dried up, and at that point, raising capital became much more difficult. But when Bitcoin came roaring back in 2024, guess what else did? Strategy. And the loop spun up again, and it started to go. So you might be asking, how big is this flywheel going to get, and how big is it now? Strategy has a market cap of over $100 billion. They've raised billions through convertible bonds, oftentimes at 0% interest, and used it to accumulate as much Bitcoin as possible, more than most governments. And their stock isn't just moving with Bitcoin, their stock is moving faster than Bitcoin. Strategy's stock has a beta of 2.7. That means if Bitcoin goes up 10%, the stock could go up 27%. But that also means the reverse is true. This is leverage without really calling it leverage. And it's being used to accumulate an asset that's already one of the most volatile in the world. That's not really a small risk in my book. That's a structural risk. So why would anyone in their right mind buy into this? Why not just buy Bitcoin directly? Well, because investors believe strategy isn't just holding Bitcoin. They believe its holdings are better. They believe in the loop. They believe in that volatility. They want that. And they believe the company will never sell because he's said that. They say that they will always buy more and it will outperform regular Bitcoin thanks to this financial engineering. But all of that belief is sort of unspoken. There's no contract. There's no guarantee. And the premium the investors are currently paying is really entirely based on confidence. And that confidence, as much as you might not think this, is really fragile. And if strategy ever signals it can't raise more capital, or if Bitcoin suddenly starts to underperform, if investor momentum slows down, even just by a little bit, that premium can vanish. And when it does, the stock really doesn't just fall, it collapses harder, faster, and deeper than Bitcoin ever could. That's the reflexive risk. The same loop that creates wealth that's so fast can also destroy it, faster than most people can even realize. And you want to know the scariest part? This might not be the most complex part of the machine, because next what I want to talk about is breaking down the tools that they're using to make it all work, including the debt, the 0% bonds, and what happens if the conversion math ever stops working. What you're about to see isn't just clever, it's engineered to look genius, right up until it doesn't work. Now, strategy isn't just buying Bitcoin, it's buying Bitcoin with borrowed money. And not just any kind of borrowing. We're talking about convertible bonds, one of the most misunderstood corporate financial weapons in history. Let's start simple. A normal bond is just a loan. The company borrows money from investors and agrees to pay it back over a certain term and interest rate along the way. But a convertible bond is completely different. It's part bond, part stock option. Investors still lend money, but they also get the right to convert their bond into shares of the company's stock if the stock goes high enough. So it's a loan with a potential bonus. And here's the twist. If the stock price rises and the bond does convert into shares, the debt vanishes. No repayment needed. It just turns into stock instantly. That exactly describes what strategy is doing. They're raising billions of dollars through convertible bonds, many of them with 0% interest rates. That means that there's no coupon, no annual interest payments, just the promise that if the stock does well, investors can convert and ride the upside. So why would anyone buy that? There's no interest. Well, because these bonds are being scooped up by massive funds, institutions that are not allowed to buy Bitcoin directly due to their mandates. They're not allowed to hold cryptocurrency, but they want to. But you know what they can hold? Convertible debt. So for them, these strategy bonds become a gateway into Bitcoin exposure without ever actually touching the Bitcoin. Now, here's the kicker. When strategy goes ahead and sells a convertible bond, they use the money to buy more Bitcoin. If the price of Bitcoin rises, the stock now goes up. And if the stock goes up, those bondholders are more likely to convert into shareholders. And if they convert, boom, the debt disappears. And all that's left is a higher stock price, more Bitcoin, and more momentum. It's engineered reflexivity. Michael Saylor even calls it a Bitcoin yield, the amount of new Bitcoin strategy can acquire per share by using this strategy over and over again. Let's use an example. Say strategy issues $1 billion convertible bond with a 55% premium. That means bondholders can convert it into stock, but only if the share price rises by 55% or more. If it does, the bondholders take their stock instead of cash. Strategy never has to repay their debt. And in the meantime, they've used that $1 billion to buy Bitcoin, pushing that cycle forward again and again and again. This is what Saylor means when he says they can compress 5 years of returns into 5 days. This is not just a bet on Bitcoin. They're building financial instruments to accelerate their Bitcoin accumulation. And right now they're doing it fast. In just 1 quarter, they issued $800 million in convertible bonds. Then, the next week, another $600 million. Then, another $800 million. It's absolutely relentless. But it's also risky, because if Bitcoin doesn't rise fast enough, or let's say the stock doesn't keep up and go up enough, these bonds don't convert. They stay on the books as debt. Debt that eventually does need to be repaid. Debt that can pile up if the cycle slows down. And right now, strategy has over $4.5 billion. Yes, billion dollars in convertible notes. And they just added another $3 billion recently. That's more than $7.5 billion in total debt. And while most of it isn't due for several years, if the stock ever stops climbing or if Bitcoin crashes, that repayment becomes real. And with it, the risk of a liquidity squeeze heightens. So the question isn't just, can Strategy keep issuing debt? The real question is, what happens if they can't? What happens if this cycle stalls? What happens if the market says no more? Next, I want to look with you at these breakpoints. What price of Bitcoin would actually threaten this system, and how close have we come already? Now, so far, this might sound like a financial engine working at its finest and the highest level. We raise money, we buy Bitcoin, and we let the market go up and do the rest. But I really just want to show you what happens when the market turns and doesn't go up. Now, I pulled some data, and as of April 22nd of 25, Strategy owns about 538,000 Bitcoin, worth about $48 or $49 billion. To build that position, they've issued about $8.2 billion in convertible debt. Remember that number. Now, here's the catch with that debt. It's non-recourse. So that means that if Strategy defaults on that debt, the lenders cannot touch the software business, the stock, or any other assets. There's only one thing that they're allowed to go after, and that's the Bitcoin tied to their bond structure, which might sound safe, right? But really it's not, because when confidence collapses, it doesn't really care what kind of legal box that you've built around this. So let's talk about their cost basis. Strategy currently averages about $67,000 per coin. That's their cost. So yeah, at today's price of over $100,000, they're sitting on a massive profit, but that's not really that wide of a safety margin when you think about it, especially in cryptocurrency, as you know. If Bitcoin drops to 60,000, the value of their stack is sitting at about 32 billion, which is still healthy compared to their 8 billion borrowed, but that's still a $16 billion loss on that pullback, and Wall Street doesn't wait for earnings calls to react. It'll react right away. At 40,000, their Bitcoin is worth about 21.5 billion, still above their debt, but now the premium on their stock starts to collapse, and traders will start selling and pulling their liquidity. New capital will now start to dry up, and now it'll push it to, say, $25,000 a coin. That puts Strategy's holdings at about 13.5 billion, which is starting to become dangerously close to their actual debt. One more bond issuance, one more headline that's bad, and suddenly they're underwater. At $15,000, their Bitcoin is now worth 8.07 billion. That is now lower than their actual debt. And remember, in a panic, the market doesn't care about liquidation. It trades on fear, so it's already sold off. Sure, the lenders can only go after the Bitcoin, but think about the shareholders. They've sold their stock in MicroStrategy because they don't want to hold their bag. So if Strategy ever had to sell at the bottom, or if creditors were to ever step in and claim their Bitcoin collateral, the equity markets would get crushed. And I'm not trying to say this is going to happen, but I'm saying how this could happen, what numbers this could happen at. Because it's not just about the price, it's about this sort of momentum. And once that breaks, the entire flywheel stops spinning. They've still got a software business, you could argue, but it brings in 70 to 90 million a year, which is good, but think about it compared to their holdings. That's not enough to keep this financial engine running. So this is kind of what I mean when I say that this model is great, but it's fragile. It looks beautiful right now on the way up with buy, borrow, repeat. But on the way down, it turns into quicksand. There's no margin call, just a slow bleed. And the market punishes anything that stops growing. And so up next, I'm going to walk you through this bond math and why some investors think that they're locking into a guaranteed upside by buying convertible debt. But the deeper that I look into this and the deeper that you'll go into this, the more obvious this will become. This isn't a Bitcoin strategy. This is a system designed to harvest volatility itself. Now, at first glance, this looks like a story about Bitcoin, but it's not. It's about something that's much bigger, something much more powerful, and something far more fragile. This is about one word: belief. Because behind the convertible bonds and the equity offerings, behind the balance sheet and the market cap, there's one silent force holding this entire thing together: the belief that Strategy will never sell. The belief that Bitcoin will go up forever. The belief that every dollar raised will be used to buy more BTC and never for anything else. And belief, in this case, has a price. You can see it in the numbers. Now, as of right now, Strategy holds something over 550,000 Bitcoin, and the cost basis is under $67,000 or $68,000 a coin. But at today's prices, that stash is worth $50 billion, and yet the market cap is over $100 billion. Think about that for a minute. Investors are paying 2 times a premium just to hold the shares of a company that owns Bitcoin. But wait a minute, they won't give you any. You can't redeem it, you can't spend it, you can't touch their Bitcoin. You're just buying into the idea that this machine will keep doing exactly what they say they're going to do forever. So why does this premium exist? Because this isn't just about leverage like you think it is. And this is certainly not about stock price momentum. It's because the market right now thinks that Michael Saylor is a better Bitcoin investor than you are. They think that he will buy it smarter. They think that he will never panic, and that he's somehow figured out ways to grow the stash faster than anybody else on the planet. So even if you could buy Bitcoin directly, which you can, people are willing to pay extra for the same version that Michael Saylor controls. That's not a premium on Bitcoin. That is a premium on a narrative. And narratives can be, well, good, but they can also be dangerous. Because here's what no one wants to talk about for a second. That premium is not guaranteed. It only exists as long as this current story holds. If Strategy ever changes their playbook, even slightly, it slows down the Bitcoin purchases, or it pauses the bond raises, or it signals a change in the philosophy, or God forbid it says, I think I want to sell, boom, the premium could vanish fast, overnight. And it doesn't need a crisis to collapse. It could simply fade off into the sunset over weeks or even days, as traders start to ask one dangerous question. Wait, what if the belief was the product all along? Once that idea sets in, everything changes. Because then you're not just holding Bitcoin with premium, you're now holding risk with a premium. And that's when leverage can become toxic, both to you, but in the public eye. Because all of this, the premium, the stock performance, and the debt capacity, is built on top of the assumed volatility of this. Strategy can't just survive, it has to keep moving, and it has to keep moving fast. More capital, more Bitcoin, more believers, and more volatility to trade with. And if any of that slows down, even briefly, the structure can get exposed. Because when you strip away the mystique, this is what's really happening. Strategy is sitting here right now selling the dream of hyper Bitcoinization and packaging it up as a stock that's easy to buy. They're turning market psychology into collateral. And as long as the market is buying that dream, they can keep raising billions of dollars on it. But the moment that that dream wobbles, even just a little, all the things that were strengths can now become threats. The premium becomes a liability. The debt can become pressure. The volatility can become a risk. And the belief, well, the belief becomes your biggest exposure. Because once the belief is gone, there's nothing left to hold the structure up. No redemptions, no built-in yield, just a company sitting on a mountain of Bitcoin and a stock price racing to find out what it's really worth without the story. And that, in my opinion, is what makes this moment so fragile, because whether you think this is brilliant financial engineering or just the best marketed trade of the decade, you have to admit one thing for me. The only thing stronger than Bitcoin in this system is the belief that it can never break. And that belief is being traded on Wall Street right now, every second, every trade, and eventually it will be tested. I guess the only question is, who's still holding when it does? You know, if everything I've said so far in this video feels a little bit extreme, good. It should, because What Strategy is built isn't normal at all. This isn't a traditional public company, and it doesn't even behave like one. It's operating more like a machine that runs on momentum, narrative, and reflexivity. A feedback loop where belief fuels price and price fuels belief. When confidence grows, the stock grows. When confidence fades, the whole thing reverses. It will unwind fast. And I want to show you how. Imagine Bitcoin starts to stall. Not crash, not collapse, just cool off and pull back a little bit. $60,000 a coin becomes $55,000, then $48,000, then $44,000. Strategy's Bitcoin stash, which was once worth over $50 billion, starts to bleed value. But it's not just about holding that drop, it's the premium. The stock price doesn't fall with Bitcoin. We've talked about this. It falls more than Bitcoin. Why is that? Because Strategy's stock has a beta of around 2.7, which means that every time Bitcoin were to drop, say, 10%, the stock would drop closer to, say, 27%. It's just like being long Bitcoin with leverage, but without any flexibility to react to the bad things happening. Now, the problem does get worse because at lower prices, it becomes harder for Strategy to issue new equity at a premium. No premium means they can't raise capital cheaply. No capital means no new Bitcoin purchases. And of course, no purchases means the narrative starts to weaken, which puts even more pressure on the stock price itself. That's what I call the reflexive unwind. It literally feeds itself. But this is still the sort of soft version. I want to talk a little bit more about the real risk here. Let's say, for instance, Bitcoin drops to $30,000. At that level, Strategy's Bitcoin would be worth $16 billion, which is still massive. But now I want you to start to compare that to their current debt of $8.2 billion on the books. Most of that debt is convertible. It only turns into stock if the price of Strategy's shares stay above the set conversion price. But in a falling market, that conversion will never happen. Those bonds stay bonds, and the company still owes the money. Now, here's the key detail. The debt is non-recourse. That means lenders can't go after Michael Saylor, and they can't go after assets outside of the company, and they can't go after really anything other than the Bitcoin. It's like a legal firewall, but not a financial one. Because even though the company isn't personally liable for this, the pressure doesn't just disappear. If they can't raise capital and the debt continues to come due, there's only one option left. They might have to sell the Bitcoin. And this is the moment where everything collapses. Not just financially, but philosophically. Because Saylor's entire brand, his entire thesis, the core of his message for 4 straight years, never sell your Bitcoin. He's repeated it on stage, on CNBC, on podcasts, at conferences, on YouTube. He's told investors that Bitcoin is the ultimate long-term asset, that you should never sell it, a forever treasury, a digital property you accumulate and you never touch. But if the company is forced to liquidate, even partially, to cover maturing debt that doesn't convert, then that thesis is completely gone. And when the thesis dies, so does the premium. Because now at this point, Strategy isn't a pure Bitcoin vehicle. It's just a company that had to sell low in order to survive and pay back that debt. And if the most famous Bitcoin bull in the world becomes a forced seller, that doesn't just break Strategy. It sends a signal to the entire market that belief, even in its most extreme form, has limits. And once those limits are seen or perceived, you just simply can't unsee them. So when people say the downside is capped because the debt is non-recourse, I think they're missing the point. The risk here isn't that the lenders will take the keys. The risk is that the company might panic first. Because once you build a system around a constant growth, constant capital, and constant accumulation, the one thing you can't afford to do is sell. Not even once. But if the market were to turn and it were to turn bad and the debt won't convert and the stock can't recover and go higher, they literally might have no choice but to sell. And that one move, a sale, would be all it takes. Because it wouldn't just be a big catastrophic financial event, it would be a psychological collapse. This would be the end of a forever holding story. And that's the real danger here. Not a technical default, not a credit downgrade, but really the moment that the market realizes that the story had a breaking point all along. So now I hope you've kind of seen both sides. You've seen it all. On one side, you've got a public company with over 500 million Bitcoin, more than any government, basically more than almost anybody. And you've also got a billionaire founder who basically called the top of the fiat system before anyone else and had the guts to go all in on a brand new monetary asset. You've got a business model that turns volatility into fuel, that raises billions of dollars from traditional markets just to buy more Bitcoin. And this is in a way that no one else can replicate at this point in time. And a model that so far has worked. Stocks up, holdings are up, belief is up. That's one side. But then there's another side. The other side sees that it's fragile. It's a machine held together by basically momentum, a little bit of hype, leverage, and a machine that only works if Bitcoin continues to go up, that really only works if the premium holds, that only works if new capital continues to flow in. You've got on this side over $8.2 billion in debt, most of it convertible, at a cost basis of about $67,000 per coin. And if the market dips below that and it stays there, that machine could eventually stall. And if it stalls long enough, those bonds don't convert. And if they don't convert, strategy has to find cash. And if they can't raise it, they've got to sell their Bitcoin. That's the moment everyone is afraid of. Not because of the dollars involved, but because of the message that it finally sends. If the loudest believer in the world of Bitcoin is forced to sell, even one time, it breaks the story. And stories are what hold markets together. But maybe none of that will happen. Maybe Bitcoin continues to rise. Maybe strategy keeps raising capital at a premium forever. Maybe this really is a new model, the Amazon of Bitcoin, like Michael Saylor said. Or maybe it's the most fragile structure we've seen since FTX, a reflexive loop that works beautifully until the moment that it doesn't. This could be the smartest financial model ever built, or the most explosive. And here's the truth. Nobody, and I mean nobody, knows for sure. Not yet. Not even Saylor himself. That's why I made this video, to show you both sides. And so now it's your turn, specifically in the comments section. Do you think strategy is the future of Bitcoin or the next great collapse? Please, if you could, let me know in the comments, because this time I'm not telling you what to believe here in this video. I'm just showing you what's real. You decide what happens next. You decide what's real. Let me know in the comments section. Subscribe for more, and we'll see you on the next video.